Hey, Darrell, good to have you.
Well, thank you. It's great to be here, Rick.
Yeah, it's wonderful. So you're the third person in our Grounded Toward Growth interview series with speakers that we brought in for my Vistage group. So it's great to have you here. Just for those listening, Darrell Mullis is an award-winning Vistage speaker. He met with my two chief executive groups in May of this year to discuss mastering financial statements, the truth behind the numbers. And Darrell was such a hit that my CEOs asked that we bring him back this fall to run an expanded session with not only my CEO members, but their respective employees. And so we conducted that a couple of weeks ago in September. It was a really great session. So Darrell, I'd like to start off by, can you give us a bit about your background, how the Mastering Financials workshop came about, and maybe explain that to the audience, as well as the impact that you have seen with this training, with these sessions for Vistage members and their companies.
Well, thank you for that question. I have a kind of unusual background. I don't really have a formal background in finance. I learned about financial statements kind of by the seat of the pants. I ran a construction company for about 12 years in Vermont and had to learn to understand my financials from that. And then a friend of mine had created a program called the Accounting Game that used a child's lemonade stand to teach people how to understand financial statements. And she took that nationwide, and I became the first person who trained to teach that program. I went on to become the master trainer for it and taught it about 400 times in every state in the country. Uh,
Wow.
and then later, that company got bought out, and the accounting game got bought out, and so I left the company and started my own company and changed the. I didn't couldn't use the lemonade stand, so I designed programs for big clients that model their own company, and so that's really how the Vistage course came along. The accounting game had been developed back here in the 70s and didn't have a very adequate explanation of cash flow. So I added that and a few other things to make it a more comprehensive financial training program.
Oh, well, speaking of cash flow, so both during our meetings, but also during the workshop a couple of weeks ago, it became really clear the importance of the cash flow statement. And I think so often we think about balance sheets and income statements, uh, and cash flow is almost a secondary thing. Let's look at the bottom line in the checkbook. But what you were able to show us is how critical the cash flow statement is. And yet, how many companies don't seem to understand that importance, or have the systems and mechanisms in place to be tracking cash flow. So, from your experience, why is that? Why is it the cash flow statement just doesn't seem to be that well understood?
Well, Rick, it's actually pretty ironic because, everybody's heard the term cash is king.
Right.
And we all know that the most important thing to daily operations of a company is having enough cash to pay your bills and pay your payroll.
Right.
And so it is ironic. I think the main reason that cash flow is not very well understood is it's the newest of the three financial statements.
Uh,
The balance sheet and income statement are hundreds of years old. A balance sheet was originally created in the 1400s and has been used. It was the original statement. The income statement came along shortly after that. So companies have been familiar with running their companies to those two for literally hundreds of years. Only in the late 1980s, when a couple of large corporations that were showing profit on their income statement went bankrupt because they had reinvested so much cash in things like inventory that didn't have enough cash to pay the rest of their bills and had to declare bankruptcy. That at that point, the government in the U.S. decided, well, we better start requiring cash flow reporting. So the cash statement became a requirement. I don't think understanding cash flow is really that difficult. It's just that most companies have not been in the habit of printing it so that they really look at it.
Right, right.
And so that's why I don't think it's again, I don't think it's difficult or even difficult to understand once you understand the statement, but you have to get your software package to report it to you.
Yeah, yeah. To get caught with inadequate cash that's a problem. And so no, I know our folks have learned much from that.
I think a lot of people have erroneously believed if we're making money, we have cash, but that isn't always true. Cash can be tied up. Either, obviously, I said earlier, it can be tied up in inventory. It can also be tied up in accounts receivable. And you can also burn through cash if you pay your bills too fast. And
Yeah.
so those are the three. You're managing what's called working capital management. There's the three places you have to manage your working capital.
Great. Well, I know it was extremely helpful and a number of eye-opening for a number of our folks. Core to the workshop, Darrell, was the education, using some generic material that you provided and walking us through in a very powerful way these various statements and how to read them and look at them. But then the last couple hours of the workshop, we used the actual data from a number of our companies who volunteered to share with those in the room what their numbers looked like. And you had taken some raw data and put it into a financial spreadsheet that was really the core of the program, which allowed us to do the analytics. Can you speak about how it is this spreadsheet came about? And I think we can put that on screen here, as well as how you use it with participants as we did in the last part of the session.
Well, first of all, Rick, when I do a Vistage class, it's only 3.5 hours. So we don't have time to do this particular activity in the program. And so this is a part of my full day program we did with your special group. Yeah. It also included a ring toss game earlier in the day. Which was and then this was the final activity. This spreadsheet, look, every company needs to know, are we making money? Are we generating sufficient cash flow to pay our bills? Are we then having enough cash to invest in growth? And is that growth profitable growth? Are we getting a return on the money we're investing in new things? And so that's really, this sheet is a one-page document that I've created that helps people understand and answer those questions. Its primary purpose is really to help you as a business CEO or senior executive understand how's the operation of our company performing, essentially to profit, cash flow, and return on invested capital.
Yeah, wonderful. Well, it was again, it allowed people to understand and see things they were not aware of, and it happened right in the room. So again, I want to appreciate.
I think its main advantage, Rick, is a lot of times if people don't know exactly what to look at, they get too much financial data, and it's often in the form of raw numbers. And raw numbers are hard to understand.
Right.
So this sheet gives them some of the raw numbers, but turns them into ratios that tell them how are they doing it? Is revenue increasing? What's happening to cost of goods? What's happening to operating expenses? How are they affecting our earnings? How efficiently are we turning revenue into earnings? And
Absolutely.
then it specifically looks at those three issues around working capital management. How fast are we collecting receivables? How well are we managing inventory if we have it? And how about our payables? And finally, things like return on assets and asset turnover to help the executive team understand how are their investments paying off.
Right. Absolutely. I know I've had probably 6 or 7 one-to-ones since the workshop. And in every case, we've pulled out the spreadsheet and we've gone back and gave me a chance to say, so what is it that you learned out of the workshop? Or for those who did not share the data, what is it you've learned in your conversations with Darrell about your numbers? And we've worked those issues into our priority list. One example is, some folks went from a very reasonable accounts receivable to, 5 times. What happened? What's going on there? And it led to lots of conversations about various clients. So, very helpful.
Well, you can see my objective in creating that one-page document was to give a CEO a picture of the overview of the essential elements of their operation so that they can see where are we strong, where is there any place that has changed, that has weakness, what do I need to work on, what questions do I now need to ask of sales, operations, finance, to understand if any number has changed significantly in our ratios.
Right. Absolutely. And it did. It showed. Darrell, on the screen is the other, I think, really important part of our conversations and your presentations, called the business cycle model. And it really took this, stubby pencil work, this nuts and bolts and analysis of the numbers through your spreadsheet. And we stepped back to say, so what? And really answer the question, what are the core numbers that are typically the CEO responsible for? What are the core numbers that typically the COO is responsible for? And then what is the role of the CFO in both capturing and providing the reports for those two respective colleagues, as well as the CFO thinking strategically as well? Could you talk a bit about your business cycle model, how that came about, and what impact you've seen with that with your clients?
Well, my personal fascination is to make difficult things easy to understand. And so you can see that one-page model we just talked about that gives the ratios is a one page to make it simple how you understand your operational performance.
Right.
The business cycle was created because of my desire to help executives understand what are the strategic and tactical decisions that are essential in a successful operation and who makes each kind of decision. And so the cycle is divided into four parts, really. And, it starts with assets that are there to drive revenue. Then revenue is there to generate profit, and profit is there to collect into cash. So those are the four aspects of it. And so you want to look at what is the activities that occur in each section, and then it is sort of divided again into what is you might call the strategic versus tactical aspects of running a business. And as you might guess, the CEO and with larger companies, the entire senior executive team is mostly responsible for the strategic issues, which, what are we going to invest in and how are we going to drive the highest possible quality and amount of revenue? That's their main job, is to drive revenue to the business. Once a company has that revenue, it becomes more tactical of and how efficient are we then at converting revenue to profit and profit to cash, which that section is literally the heart of the operation, run by the COO and all the operational staff. The CFO, as you can probably guess, plays a role in both areas, helps the CEO in developing strategic initiatives, and helps the operations resolve issues between sales and operations themselves, and just helps them make that operation more efficient. And of course, is responsible for managing working capital, collecting cash. So that model helps you to see, you're again on one page, the entire picture of your operation. And so you can see where you're strong and where you might be weak and need to develop. And it also ties those metrics that we do in the sheet we talked about earlier to this model. So it shows you, for example, asset turnover as the executive team's measure of how effective their strategic decisions are. It shows you return on sales as the major measure of efficiency. How efficient are we at converting revenue to profit? And then working capital model to show how efficiently profit is being converted to cash. And then ROA as how much are we getting in return on where we got the money tied up in all the assets, so that it relates to, and it's why you then need the bottom line measures to see how you're doing it, and it relates into each of the 4 phases of your business cycle.
We we have a saying in Vistage, all of our executives have heard it: how do I spend less time working in the business so I can spend more time working on the business? And I find it to be that never-ending challenge of being able, as a CEO, to give yourself the space to think strategically, to step back from the day-to-day and really take a breather and be thinking about where are we, where do we want to go, how do we get there? And when we say all of that, oftentimes people say, okay, but what is it I'm looking at? And what I found so helpful, what I think our members found so helpful about the business cycle model, is that we gave some very specific, concrete ratios, numbers that are required to think strategically, are required to think operationally. And so it really puts some meat on the bones in terms of working in the business versus working on the business. So again, a great piece of work there. I want to thank you for that.
Well, the working on the business is the shift from tactics to strategy.
Yes.
And honestly, most Vistage CEOs and most company CEOs started their company, they were very small, and they managed everything.
Right.
And as they grow, eventually there's too much to manage, and they have to turn over the management of operational issues to other people.
Yes.
And of course, that's essential. Having people who are qualified to run the operation at least as well, if not better than you, frees you up then to work on the business, so that your time becomes spent on where are we going, what's our footprint in the world, how are we expanding, how do I look at the global marketplace and see where are sales going to come from, and how do I position our company to have the highest and best quality of sales. Yeah. That's really then how you're working on the business, because let's face it, almost every strategic decision made in every company in the world is about how do we improve the quantity and quality of revenue.
Right, exactly, and get to that first circle there.
That top line is so important. There's no bottom line without a top line. So right. You got to make sure. That's why it's in the CEO's hands. So that's the most important thing in a business, that top line.
Yep. Well, it's been very helpful for our members. I know a number of my folks followed up with you, Darrell. What is a typical follow-up conversation look like when you're engaging a Vistage CEO?
Well, a lot of times it's just additional details about that spreadsheet and specific items on it. And sometimes they might have specific questions about a problem area in their company and what my thoughts are of how they can resolve that problem area. I might give them some creative ways to look at their operation and how to expand it, or certainly to look at what is the most profitable area of the business and how they might expand that. Some people just want to buy that software from me, and I sell them the software itself if they want to. That is something they could create, but if they don't want to take the time to create it, I sell it to them. So those are the kinds of just conversations that we have.
Great. No, I know it's been two or three of my folks have done that, so I appreciate it.
Yes.
My last question is, I loved your story. I understand you have a soft spot for the ice cream industry. Can you tell our folks how that came about?
Yeah, that's an interesting part of my life. Many years ago, I actually worked in a treatment facility for disturbed teenagers for several years up in upstate New York, near Ticonderoga. And I met a guy there named Ben, who was a pottery teacher at the school. We worked together for 3 years, and then the school closed. So we both moved to Vermont, and Ben wanted to start an ice cream store. And I started my construction company, and he found an old gas station and he wanted to start his ice cream store in there, and asked me if I'd help him fix up the gas station. And I said, sure, I'll help you. He said, I got no money to pay you with, but I'll give you free ice cream for life. And so I said, okay, Ben, I'll help you at night and on weekends. So yeah, along with his friend Jerry, I'm now the charter member of the Ben and Jerry's Free Ice Cream for Life Club. I get all the ice cream I can eat for absolutely free. And those guys were great friends, and we don't see that much of each other anymore. They still live in Vermont, and I'm, of course, in Colorado. So, but they send me, I get a package of coupons to buy pints of ice cream all the time. And I can also go to their franchise stores to get anything I want. It's kind of nice. I was very popular at my daughter's birthday parties.
I bet you were. What a great story. That's a lot of fun. Wonderful. Well, Darrell, I want to thank you for your time today. We will be putting up on the screen here your contact information, email, phone number, and so on. What's the best way for people to reach out? What's the best way for people to contact you?
Well, they can just text or call me at 303-961-4941, or email me, Darrell@metamarklearning.com. Either of those is fine. I'll respond as quickly as possible, and love to talk to anyone.
Great.
If they're interested in simplifying and having a better way to understand their financial statements and how their operation is performing.
Super. Well, thank you. Appreciate it.
Thank you, Rick.
Yep.
Enjoy talking with you.
Same here. Bye-bye.
Bye-bye.